All right, traders, this week is going to be a very special and lucrative trading week as the SPY has now officially tested the 52-week highs and rejected. With that being said, I'm going to prepare you to trade the best setups at the best prices. We're going to be breaking down the key levels that we are interested in buying call options to go long for the bear trap, and we're also going to be going over our key levels to short the SPY and buy put options, make money on the way down for the bull trap. This is going to show you how to trade the best setups at the best prices. If you haven't already, make sure you watch my previous video. It is a phenomenal lesson breaking down 30-minute candlesticks. Let's get straight into the analysis. So in terms of the SPY, and what we need to understand is SPY rejected 52-week highs. Not only did it reject 52-week highs as we anticipated, but it formed a very bearish doji on the daily chart, which is not a good signal for the bulls in terms of the short-term micro price action. What we are currently seeing is an initial test of the 52-week highs, and it failed to break above those 52-week highs at that 431.70, and basically it is forming a bearish doji. On the daily chart, this is a bearish doji. This is a great confirmation to short the SPY and buy put options. With that being said, what I'm going to be doing heading into market open tomorrow is I'm going to be focusing on this zone. This zone is going to help me determine if the bears are truly in control. Based off of confirmation, this looks super bearish heading into this week. I don't think in terms of, the Trump news that was released as well, I don't think that's going to be helping the market going up as well in terms of timing. I think we're definitely due for a pullback. But anyways, 29.90. So $429.90. That is going to be the closing price of Friday. The previous closing price is always a key level that we are interested in watching. Doesn't mean we're going to be trading it, right? Not all previous closing prices are created equally, but in terms of this previous closing price, it is nearly at 52-week highs. And this is what I want you to understand. 429.90, I want you to write that down. That is considered major resistance on the SPY, and that's our new make or break gap level, right? Now, this is what I want to point out and bring awareness to you. I want you to think of the bottom of this channel right here, 428.70. So understand what it is that I'm doing, right? $428.70. Why does this matter? Because if we go back throughout the daily chart on the SPY, you can visually see there was very, very strong resistance at 428.70. And when it reacted as a resistance, SPY had multiple major bull traps with very big sell-offs in a short period of time, all the way down into the 416s within just 1 to 2 days. So the point I want to bring awareness to is, in order for the bears to actually take control for the short-term being, what they would need to do is they would need to stay under this 429.90, form a roof, form a resistance. But then in terms of, truly super bearish for the week, all they would truly have to do, in my opinion, is crack below this 428.70 level. Because if they crack below this and then it bounces back up and forms a lower high, forms resistance, forms a roof, that means that the bulls are going to start to get trapped. And if this level cannot react as a floor, then it's super bearish. And what I want you to understand is, if they do form a floor at 428.70, then they will continue to try to run this up to 431.50. That's where they're going to try to run it up. So what I need you to understand is if they form support at 428.70, it's going to maintain attempting to be bullish, trying to break out. I don't think it's going to happen, but that's what it's going to try to maintain. To go truly super bearish, it needs to crack and go under 428.70. So if you see strong resistance at this 430, you can try puts, and then your target is at 428.70. If you see a crack and a strong breakdown of this support of this previous resistance at 428.70, and then it spikes back up, you can try puts on the retest, right? So if it cracks 428.70, that means it's going to try to go bearish. And when it spikes back up to 428.70 after cracking, then you can hit puts on the retest. So I want you to think of the higher end of the zone, 429.90 and 428.70. And it is not truly bearish until they can crack, spike back up, and form a lower high form resistance at 428.70. That would be your best confirmation. Based off of the daily chart, this is looking like a phenomenal trading opportunity for puts. And in terms of the SPY, the SPY has 500 symbols within it. The one that I found to be the most identical out of those 500 is going to be Apple stock. And if you look at what happened at Apple stock, and by the way, there was also a very, very big whale alert on out of money put options on Apple stock recently, and Apple chart is not looking too bullish at the moment on the daily. But this is what I brought awareness to if you watched my videos last week. Apple had 52-week highs right here at this 175. As soon as Apple tested those 52-week highs, it formed a bearish candlestick on the daily chart, and it double topped at those 52-week highs. And then you could see that was finally the beginning of a very nice bull trap for the short term. Look at what happened prior to them. It was very strong bear traps, nice, strong uptrend. But once it formed a red bearish daily candlestick on the 52-week high retest, Apple saw a very, very nice drop in price, right? So in terms of history repeating itself, what we are currently seeing happen is we are seeing SPY attempting to do the same thing that Apple stock has previously did when it tested those 52-week highs. And that's what I want to bring awareness to you, right? So especially if we gap down heading into tomorrow, then it's just going to be super bearish overall in terms of this micro week. That's how things will be set up if it does gap down, right? So just understand, as long as we maintain under 429.90, the bears are good to go. To be truly bearish, all we have to do is crack 428.70. I strongly believe that will trigger a major bull trap if we do crack below that 428.70 level. You know, because history shows it can have a very, very nice drop if it does crack. So if we crack below 428.70 and then it spikes back up to 428.70, I will be looking to do puts. Now, in terms of my main ideas and main interest and main levels that I'm interested in trading at, so 428.70, I want you to think of that currently as the bottom of the floor. That's make or break. If it cracks, it's basically just over throughout this week as long as they maintain resistance. So 428.70, that's one key level that I use throughout the daily chart where all the major bull traps were created once it reacted as a resistance, right? So all we need is a crack and then pump back up, reacts as a resistance, short the lower high. 428.70, 429.90, I want you to think of this as the middle gap. This is the basically the upper end gap. This is the highest gap, not the middle. This is like the highest gap, one of the highest ones, a great resistance level to short. But I want you to think about it as the middle, because if 428.70 does hold, they will try to pump this to right here. And then this would be the next best level to short the SPY, this 431.40. So I want you to think as 429.90 as a key gap resistance level that's kind of in the middle. And then I want you to think as 428.70 as the floor. And if the floor cracks, then it's going to trigger a major bull trap later on throughout the week, as long as we maintain under 430. And then in terms of the exact peak, if it does hold up, you can try puts at 431.40. That'd be the next price. 431.40 is this key support level that kind of wasn't retested, and it triggered a major bull trap. Just to show you and give you some understanding in terms of what SPY is doing, it topped at 52-week highs, and then you could see right here you had some support. You had tiny support at 431.50. It had a big sell-off from that support, so the trend's trying to go bearish. When it pumps back up to that previous support level, that's when we short. Instead of shorting into the red, we short into the green when it hits the previous support. That's what it is that we are doing to get the best price, right? Because it can bounce as it's going down, so we just wait for it to rip back up, and when it tests that previous support, it's going to try to react as a resistance, react as a lower high, and try to retest the bottom of this wick because it's on a bearish overall trend because support cracked, right? So I need you to understand that it gapped up, it touched 52-week highs just like Apple. It topped out just as we expected. We banked on puts. It cracked support at 431.50. It pumped back up. 431.50, that's where the bull trap triggered right here at the support. It reacts as a resistance, it reacts as a new lower high, and then it goes lower. And then in terms of, well, where's the next, where was the next bull trap? The next bull trap was right here. When it cracked 430.50 support, the bottom of the wick, it had a nice sell-off. Pumped back up. 430.50 was literally the highs. Previous support reacts as a resistance. Previous level where the bears got trapped here on support is now the new bull trap level. So see how the trend is trying to react bearish. See how once it cracks support right here, it spikes back up. Previous support reacts as a resistance, new lower high. It cracks support right here, and then it spikes back up. Previous support reacts as a resistance, and we short into those new lower highs, right? So we typically will miss out on the initial crash first, and then when it spikes back up, we'll short the lower high unless it's at our best level. Like we were doing puts at the best price possible because we knew 52-week highs initial retest was going to be an amazing level, right? So I really need you to be aware of this 428.70, 429.90, and 431.50. Those are our true major levels, right? And just to understand, we will see a very, very nice drop. If it cracks below 428.70, reacts as a resistance, we'll see a nice drop, right? Now, in terms of targets, if it were to crack under 428.70 and react as the new resistance, what would be the targets on that type of trade? So you can use the 5-minute chart and the 30-minute chart for targets. A first key target would be right here. This is where they're going to try to bounce it. So if we go under 428.70, this is going to be very, very key. You have a lot of strong bottom wick support at this 427.50 and 427 level. So I would be locking in gains into those wicks. Whenever I see wicks like that, I'm selling my puts. I'm not holding and hoping that it's going to go below the wick. I'm selling into the move, into the wick, right? So those would be your overall key targets in terms of tomorrow, right? Now, you can see there's also a lot of support down here at this 426 level. That's another key target to be locking in profits. Now, let's discuss upside potential. Say it goes super bullish. I'm not really interested in calls as of now in terms of making this video ahead of time. If it does go super bullish, I'll mainly just be on sidelines unless I decide to do price action trades that truly aren't based off of this type of video lesson with the key levels. It's more just price action with confirmations and stuff like that with quick scalps. But what you need to understand is if you ever see the bulls break above 431.50, they turn it into support, they go above 32, the only next level to try to short would be right here. So if you ever see it break above 432, they're forming a floor. I wouldn't really do anything in that situation, and I would just wait. And then this is what I would wait for. So the next level where it's going to try to drop, if 432 were to break out and turn into support and they held 431.50 frequently, the next overall zone, I wouldn't really say it's a level. It's more of a zone because it can top out in between this zone. If we were to talk best price, the best price would be right here at 437, this like 437 to 438 level. This is previous support, and once it cracked, it triggered a major bull trap and major crash, right? So if it did go super bullish, we would be waiting until the low of this, which is at 435.60, to the high of this, which is at 438. Now, if you were to go with the best level, 437, 438. But basically, this overall zone, the low of this, and the high of this, that's where they're going to try to top it next. If SPY flips super bullish this week, that'll be the next levels where we target puts. And if we did end up hitting puts, if we did end up hitting puts earlier, we would cut our losses quickly and we would make all our money back likely and more hitting puts at these levels. So that'd be the game plan for that. Like I said, I don't have any interest currently in call options with the bearish confirmations and stuff like that, right? So in terms of true special levels, a special level that's never been tested, that's unlikely to be tested, but we'll see. This can change later throughout the week. Like I said, the zone of 435.50 to 438, those levels haven't been tested. Amazing levels to try puts. The higher the level, the better. The higher the zone, the better, right? Now, in terms of our key levels for puts right now, we're going to be eyeing 429.90 and 431.50. Those are my two favorite levels. 431.50 and 429.90, those upper resistance levels are my favorite levels. And what you need to understand is, guys, this is what you need to also understand. So it topped at the 52-week high. It's forming lower highs. It's on a downtrend. It's trying to go bearish. But the reality of the situation is, if they cannot break below this previous weekly resistance, this 429, 428.70 level, if they can't break below and turn it into resistance, then they're going to try to continue to pump it up, but it will likely drop at 430. If not, then 431.50. That'd be like my best level to try puts last resort. And then if I get stopped out on that, I'll just wait till the 35 to 38 overall zone, higher the better level, right? So just understand, if they continue to hold above this 428.70, this like 428.70, it's still technically bullish, but it will likely drop at 430. If not, then 431.50. And if we try it and we get stopped out, then we're just going to wait till 435 to 438. That's our overall game plan. And I would use confirmations in that situation and just understand, if previous resistance right here reacts as support, reacts as a floor like it's still doing, even though it's forming lower highs and trying to react bearish on the daily candle, it is still above this previous resistance. However, in terms of confirmations and in terms of what Apple stock did, it's going to try to get crushed heading into this week, in my opinion, but we shall see, man. I have no regrets at trying puts at this level, man, and we have plenty of gaps to fill below, man. Look at all the gaps that we have to fill below. We don't have many gaps to fill above, but in terms of gaps to fill below, we have a gap to fill below right here at 421.85, and we have a gap to fill right here at 417, and then there's many more below, right? So the question is, what would be my levels, since we already discussed like great opportunity to likely swing trade puts. Members within Trader Society did end up swing trading puts from that 431, 52-week high level. And all the power to them, because it's a great confirmation and no regrets on that. But anyways, what would be the levels where I'm interested in buying this SPY and going long for day trading and swing trading? So I'm going to share with you those levels, and what you need to understand about these levels are they're going to take time to hit, and they are very special levels because they have not been tested. So one thing that I've noticed with reversals is, it's likely going to have a reversal the first time it hits a key level. So in terms of key support levels that we've been waiting for, you can see we have a lot of support at 426, but it's already been tested multiple times, so it doesn't interest me. Everybody already knows about it, so it's going to be a battle, right? Plus the daily chart is looking bearish, so I don't want to buy calls at that support level. I want to aim for the best support level. So in terms of my levels to buy calls, in terms of day trading, I love the 424. I've been waiting for 424 to hit. Whenever it decides to hit, that's where I'm interested in buying calls. I want to buy calls at 424. The reason why is this level has not been tested, and this was the gap and go low of day level. SPY had a gap up. It opened up higher than it previously closed, and you can see the low of day was at 424 right here. And once it bottomed out, it triggered a major bear trap, skyrocketing all the way to $430 within just 1 day later. So the most likely outcome is, it's gonna spike when it hits this level for the first time. And the reason why that is, it triggered a massive bear trap at this level, and it was never tested. So if this just blew through support that has already reacted as support many times, nothing special about because it's already been tested. If we just crack through 426, we should see a small bounce where basically this is another key. When we're at a key level that has not been tested, $424, not been tested, this is where the true bear trap was created when it gapped up for the gap and go move. If it goes under 424, what would likely happen is the calls that went out of the money, the 424 strike, would become back in the money. That's just how the game works. You'll see it happen all the time. I mentioned this a couple videos back. When SPY hits 52-week highs, the 432 puts, once they go out of money, they're going to go straight back in the money. Look at this. The high was 431.99. They didn't go out of the money. They missed it by a penny. But the point is, as soon as it hit that initial key level for the first time that many were not prepared for, the puts basically went from out the money to instantly back in the money. And what I'm telling you is that likely happens on initial key reactions where overreactions and major bull and bear traps get created that have not been tested. So where were some major bear traps that got created that were not tested yet, that nobody really looks at, they don't pay attention to? 424, that's the gap and go low of day level. So if the 424 calls go out of the money, they're likely going to spike back in the money on the first time. And then right here at 421.82, this is a special level. When 422 calls go out of the money, they'll likely pump back in the money. So we're buying these calls, we're looking to buy them basically out of the money or at the money, and then we're selling them in the money. That's how the big profit is made with an option. If you can buy an option contract that is out of the money and you can sell that in the money, you are going to make a very lucrative percentage return on that trade, even if you didn't buy it far out of the money. That little flip switch is a trick that I love to use, and it works very, very well with initial reactions on overreactions with bull and bear traps. That's what I've been teaching you all along within these videos, and that's what you need to focus on. You need to focus on levels for stocks that are having massive overreactions, that are having big pumps or big dumps, and you want to wait for them to go back to that initial key level, right? It's going to take time to trigger. Once it goes back to that initial key level for the retest for the first time, then it's likely going to have the reversal. And then you do the trick, like I said, out of money to in the money options, the closest one to the strike price. So, say I hit 424 calls, it works out, I take my profit, great. Or if it doesn't work out, I get stopped out. My next level that I'll do calls at is right here, and I'll make it all back, or I'll make more money if I made a win on the first trade. 421.82, 421.82. This is a key level where SPY gapped up from, and this is where it trapped all of the bears. It's a previous closing price level, and it's a gap close reversal level. Now, in terms of swing trading, if I were interested in swing trading call options on SPY, what would be the levels that I would be targeting as a swing trader? So it's a little complicated. It's a little complicated because we're due for an overreaction. We are due for a pullback. The daily chart is bearish. So where would the reversal likely happen? If it were to repeat like Apple, it would reverse later into next week, not this coming week. It would kind of bottom out towards the end of the week, and then it reversed later into this week. So you have to take it day by day at a time. But in terms of swing trading calls, these would be my main levels, man. If you study the daily chart, if 428 cracks and reacts as a resistance, we've seen hard crashes in a short period of time to 416. So if we were to go with true best levels, 414.65, there's a gap to fill here. $411, that's the best one possible. That's the gap to fill here. This is where the craziest bear trap got created. So 411 would be the best level. It's not going to hit this week, though. That would take time. In terms of other levels for more short term, I'm going to be eyeing these two levels. 414.65 is a nice lower middle one. I love that level. And then I'm keeping an eye on 421.82. So if I see some sort of bullish daily candlestick on the SPY right before it closes later into this week, it has to be later into this week, because the theory I'll likely go off of is it's not going to have a crazy reversal until next week. If it were to repeat what Apple did, Apple took a couple days to kind of bottom out, and you could study the past that. I'll be analyzing and watching it throughout the chat. But I will be keeping an eye on 421.82, but the level that I really love is that 414.65. And then in terms of the future, 411, man. These two levels right here, you cannot go wrong with swing trading calls with a further expiration, staying at the money, as long as you're doing it with a green bullish daily candlestick or a trend reversal candlestick. So these daily candlesticks do not close until market close. So basically my style of swing trading, typically, I wait right before the market closes. So if I do that, I might miss out on the best entry, but I'm using a confirmation, so it's likely going to work. I'll have a higher win rate. I'm okay with doing that. In terms of swing trading, you have to be extremely safe. So the way I really swing trade, it's more of just based off of the next day's price action. It's not based off of today's price action. It's based off a daily chart confirmation. So that's all the information that I wanted to share with you guys. That's what I believe is going to be the best trades heading into this week. And I'm telling you guys, this is going to be a phenomenal week, man. We absolutely crushed it last week and on Friday, man, with this 432 level. Everyone was smashing puts. We were all prepared for puts. We did not chase puts at market open because SPY had a gap up and it was forming a floor above the weekly highs. Therefore, there's no reason to do puts. Plus, we've been avoiding trading the first 30 minutes at market open because it's the toughest time to trade, man. It's going to be choppy, a lot of bull or bear traps, or it's just going to go straight up or straight down. Instant traps. What we like to do is we like to miss out first, wait for all the traps to get created, and then when they retest back towards those initial levels where everyone forgot about, right? Then we look to get in, man. So some tips I can give you, man, like I said, the overreactions, big move up, big move down, some overreactions, the gap levels, the previous closing price, the gap close reversal levels, the first time of that level being tested, make sure you guys are setting all of your price alerts as well. Those are some tips and tricks that I can give you along with that out of the money to in the money ideas. So if you combine all of what I just taught you, man, the bull and bear traps, the overreactions, out of money to in the money trick, the key levels, you should be doing phenomenal. You got to be patient and wait to trade the best setups, the best prices. With that being said, man, this is going to be an amazing week. The market is setting up for a big move. It's likely going to be on the downside. It topped to 52-week highs. You got a bearish confirmations. We'll see if it gaps up or if it gaps down tomorrow. We'll see what it's going to do. But it's going to be a phenomenal trading week regardless. If you want to join us, it is the first link down below in the description. You will get lifetime access at a one-time fee to the entire Discord server of Trader Society. to the entire community, the networking opportunities, the moderators who are scalping at the speed of light. It's fast money, man. And if you want to be a part of it, I would strongly recommend that you join Trader Society. It's the first link down below in the description. You also get access to the live trading streams, the live trading voice channel, all of my real-time trade alerts, all of my real-time market analysis, all of my confirmations and charts that I post in real time on trades that I'm making and analysis. You also get access to the watch list that is when the markets close and also when the markets open, with midday updates and close updates as well. All the real-time day trades, all the real-time swing trades, the video lesson library, which will teach you exactly how to master the SPY and how to master stocks in general. If you want to learn how to master price action, how to master and trade the chart, because that's what it is that we're doing. We're trading the chart, we're trading patterns, we're trading bull and bear traps, we're trading the candlesticks. Use those 30-minute candles. Go back and watch my previous video. Great tips and tricks on how to do that. And if you want to be a part of this, man, I would strongly recommend you do so. It is the first link down below in the description. This is the best time to be investing into yourself, man. Let's make the rest of this year the best year we could possibly make it, man. I will see you guys tomorrow live at market open.